Okay, folks, just doing a sound check. Let me know that you're hearing this all right. So are you guys hearing this a little better right now? Just checking. Okay, awesome. Hey, Gino, how's it going, man? Roger, Derek, thanks for showing up, guys. Let's see here. We've got a couple things we'll just kind of chat on. I'm going to put on screen here just the E-minis trading. They're really pretty boring. Guess we're waiting for the Fed to come out with their statement that they usually do. Hey, Professor Paula, live from Paris. Hope you're doing well over there. Just a couple more minutes, folks. We'll get going. Got a lot to talk about today. This week is probably the most compacted week of information I think I've ever seen here. Just testing out some cameras here. Looks like we're a little close. There we go. Got rid of the green screen. Just got the library in the background, so we'll go from there. But couple things that I want to talk about. We're starting to fill the room up right now. Before I get into today's commentary and everything that I want to cover today, I'm going to do my best to do something a little different than we normally do on these live streams, in that I want to cover each segment of the market, and I'm going to do it in detail, and this is going to be content for us to continue, because as many of you know, and there's some confusion around this, is the daily videos will, on Friday's video will be the last daily video. There will be a video for Sunday night that will cover and have a perspective of for the rest of the year, but I am taking off for the balance of the year. Long needed break from all the craziness on this planet that we have that we're dealing with right now. So, you know, just know that I told everybody, if you're not following me on Twitter, I'm at Twitter at Portfolio Expert with no E. So Portfolio, no E, Expert. And you can follow me there. I will be watching the markets. I'll certainly have some things going on that I'll be commenting from time to time, but it's going to be minimal. Since nobody flies in airplanes anymore, I'm going to be in cars for multiple days, moving around. So looking forward to it and all that stuff. But so the videos will go through this week. Next week, there are going to be videos that are going to be released. Some of the stuff will be some content that I've got out there that you folks haven't seen. Some of it will come from some of my rants on the live streams that we do right now and all of that stuff. So it's all really good. Okay, so sound. Are you kidding me? Sound's really low. That's really bad. Okay, that's wonderful. I'm glad I did that. I think it's this screen here. So bear with me. So just let me know if you're hearing better. Yeah, don't try to get a hold of me, Jay. Don't worry about it. I'm sitting in line. It's that stupid screen that I use when I go full screen. I have to work on setting that up. So you should be able to hear me better. Yeah, so I'm going to do it all over what I just did. How's that? So we'll try this again. Do I look tired? I'm not tired. I got a good night's rest, so must be the camera. Okay. All right. Yeah, it's that screen. I forgot to work on the mic on that other screen. So yeah, maybe I look better smaller anyway, right? So I don't look as old. I think somebody was joking. I hope somebody was telling me I'm in my late 40s. I need to smile more when I do my videos, and I'm not in my late 40s. I'm in my late 60s. So thank you for the compliment, whoever said that. So I'm going to try everything I just did again. So here is the plan. I want to make sure that you folks are informed the best that you can. This week on Friday's video will be the last everyday commentary video for this year. Not forever. People keep thinking I'm quitting. No, not forever. Just for this year. I'm taking off the last couple of weeks. I do this every year. I'm not even going to be near this equipment I'm sitting by right now. So it's not going to be possible to do the videos. But some of the content that I hope to produce today will be really talking about some of the intermediate and longer term viewpoints, something that's going to carry us through year end. If you don't follow me on Twitter, follow me on Twitter, because I will make some comments. I will be watching the markets, but it's going to be in and out. I'm going to be like an old AM radio station on a country road. It's going to be in and out a lot, but I will make some comments and things, so there will be some things to definitely talk about it at that point in time. So, you know, that's the plan. So there will be a video for Sunday that is planned to cover what my expectations are for the balance of the year. Typically, right, markets are really quiet the last 2 weeks of the year. This week, we've got everything you can throw at the markets. We have quadruple witching. We've got a rebalance of the S&P. We've got Tesla going into the S&P. We've got the Fed here in a little bit, which we'll be watching together. And it just goes, it's action-packed, right? Everything you can throw at it. The I'll do air quotes, stimulus, right? These guys, are they actually going to do a deal? I think it's all priced in, by the way. I think that's what you're seeing in the markets right now, but we'll get into that in a few minutes. But yeah, so, but the there's just a lot of things that are going to go on. There appears to be headwinds. We still have election confusion. Call it what you want. I get I try to stay out of the politics the best I can. But as I've said before, that politics matter and taxes matter, and there's a lot of stuff that matters. So we need to make sure that in the process of all this is that we are paying attention to what's going on. That's what we do as investors. It doesn't matter who the president is. It doesn't matter all of that stuff. I guess it does matter, especially when you have some, literally you got heads and tails, whichever one you want to make. But we're looking at the complete opposite of what's been going on for 4 years, and in some ways, and it's going to be interesting. In last night's video, I talked about the fairy godmother, which is going to be Janet Yellen. She was one of the advocates for the Fed to be able to buy equities, just like they did in Japan. So they're probably going to pump this market to crazy levels, and that's why I had the little going to the moon, guy climbing to the moon. That's they're going to do their best to manipulate and get these markets to where they want them to be. And I'm not sure what that statement actually means, other than that will be the window dressing while a lot of other things are going on in the background. People tend to think, well, if the market's going up, everything else is okay. Well, that's not true. We know that to be a fact. You're looking at all these crazy politicians shutting down states, and New York City. I don't know if you guys know who Dave Portnoy is, but he went on another one of his classic rants. So if you don't know him, on Twitter this morning, he went on another rant, and I thought it was pretty interesting. I think it's pretty spot on when he gets on some of these rants that he does. But the goal for today is going to go through every market I can in detail, and we're just going to go down the spectrum. We're going to start off with equities, and we'll go through the spreads. We're going to go through things. It's interesting to see that the mainstream media caught up with me at about 5 months later. I've been telling you folks to pay attention to the small cap stocks since July, maybe even before that. I thought actually after the June correction that we went through, after the initial ramp up off the lows, I told you folks that if this market was going to continue to move higher and do all the things that we've watched happen since then, that the small caps, mid caps, there was going to have to be new leadership. Now, the NASDAQ is what it is. You still get all of it. There's still a lot of cash flow there. But we'll go through all that detail. So we're going to go through equities across the board. And then when I get done with that, we're going to go through interest rates, the U.S. dollar, gold, and then we'll start to break in. I will go through Bitcoin. I did a video probably 5 weeks ago, Bitcoin to 23,000. I'll update that as well. I even hate saying Bitcoin on this channel because all the Bitcoin monsters show up on the channel. They get their word recognition going, and the bots show up like crazy, and it's a lot of work running the channel and trying to keep all these jokers off of the channel. It's pretty amazing. YouTube doesn't seem to give a shit, so we've got to police that thing all the time. Yeah, I actually have. I haven't showed it to you guys. I got a new crystal ball, and it's actually pretty cool. We're going to start a promotion. I'm just going to go on for a few minutes. It looks like we got about 350 people or so on the channel now. So we're going to go ahead and kick into the main part of the analysis and everything. But yeah, so I did get a new crystal ball, and we are going to do a promotion for you, those of you that have signed up for the software platform. I'm going to show you some things today. I've been talking about something. I've got a small presentation I'm going to talk to you about today, and I am doing a video series. I'm working on it right now. It's on Kathy Wood, who's the disruptor investor. And, you know, she's pretty popular. I think there's 10, 12 billion in her ETFs. There's not a lot of money in them, but it's interesting. But it's the goal for what we're doing here is going to be showing you folks how we can actually deconstruct and reconstruct ETFs and using our software and making them better. I think we doubled Kathy's returns, something like that. Might even be better than that. So we're gonna reconstruct Kathy Woods, and we're not gonna do that today. But I've got a 2-part video coming out, and then we're gonna go through each one of the funds, and then we're gonna build the best Kathy Woods fund you've ever seen in your life, guaranteed. So let's go ahead and start to dig into stuff. You can see futures are on the screen right now, up 425. As we get closer to the Fed, I'm going to get into a couple rants here in just a minute. But as we get closer to Fed time, if you guys would give me on the chat line, if you would give me just a little bit of a heads up so that I know it's coming, and I'll try to set it up so we can at least maybe watch CNBC for that recap. If I can get it set up easily, we'll do that. So we'll go through that and do that. We'll get through a lot of stuff here today. So let's go ahead and get on to some charts here and see what we can unpack, because I think there's some exciting stuff to go through. Futures are basically flat. Let me go to the daily here so we can see exactly what's going on. And we got what's called, I refer to a lot as an RXT Sell, and I'm going to bring up the market grid here real quick just to kick this off. And what happens is we get a close above the level that is expected to be the extreme for the day. So this algorithm that I built that you see plotted on the screen is actually estimating what the likelihood of the high lows are going to be, and the extremes are the dark orange line in here. And then typically we will trade within these, and these R2, R3 numbers, I talk about them every night in the videos, are places where I expect high lows to happen. And based on momentum, what's happening with momentum right now, if you look at the PPMs on the screen here, is what we're really seeing is momentum is fading very quickly. This usually doesn't end well. Usually ends up in the potential for at least another test of the 21-period moving average at 36.32, but more likely we're going to head toward the 35.34 level. And we're going to go through weekly all the way out to monthly here, and I'm going to switch over to SPX, but I'm starting with the futures, and we're just not seeing something I talk a lot about. We're not seeing that VIG, or that momentum that gets behind the market, that you can feel what's happening. There's no feel in this market. It's just meandering. And in spite of trading up at the higher end in the range, we've been up to 37.01 on the futures. The high that we printed the other day was at 37.0650. So we're trading at the highs, but there's no one looking to put any money out there. So maybe after Powell talks and he tells us how wonderful things are going to be, and especially since he's going to have his old colleague and I used to call her Grandma Fed, so now she's going to be the fairy godmother. That's Janet Yellen I'm talking about. And considering that she is going to end up being the Treasury, she is going to be, it's going to be interesting, because we all know on the politics side that Georgia matters, and Georgia is going to be the point that is going to neutralize some of this stuff. And if Georgia goes down and one side of the aisle has control of both sides, everything, then it could become very radical. And in that case, a $900 billion, I heard a number of a $12 trillion bill going out. And if that happens, we're looking at the S&P at 3,600. S&P will be 10,000 if that happens, because they'll actually create the largest wealth gap ever by doing all this stuff that they're talking about doing, or so it would appear. And yeah, and so what we're looking at from the short-term patterns is just what I'm telling you. Now let's go over and let's start looking at the SPX, and let's dig into. We're gonna go bottom up, which means we're going to go from daily, weekly, and then monthly. So this is a similar chart as I mentioned in last night's video. There was a more defined RXT sell. RXT yesterday was 36.86. We closed at 36.94. We're basically flat. I realize we're positive. We did trade up to 03.84 on the cash. The high that we printed in this pattern, you have to go back to over to, let me find it. There it is. 37.12.39 on 12.9. That was the high of this pattern. So we're trading up to that level, but we're not really, like I said, we're not seeing that VIG. Look at these PPMs on a short-term basis. They're all rolling over. PPM 1 and 2 have crossed through their first and second derivatives. And what that means is that the probabilities of it staying above those two moving averages. So PPM 1 tracks the 10-day simple moving average. PPM 2 tracks the 21-day moving average. This tells us that there is extreme vulnerability to the downside for us to cross through these moving averages and move down to the next level, which would be the 40-period moving average at 35.52. Now, it is rising at about 6 handles per day, and it looks like it's going to maintain that, but that number will move up over the next 10 days, 60 handles. So that's going to put us closer to 3,600. So somewhere around 3,600 to 3,685. We'll pick these numbers up on the longer term charts as we go through it. And the pattern is that I think is going to happen here. Let's just go ahead to the weekly chart. The pattern here is setting up something I talked to you folks a lot about, and I've started to describe just a little bit better, is this dragon head. And typical a dragon head goes sideways and it will stay in the range. The key level in this chart is very similar to that 40-day moving average, but it's the 10-week moving average, 35.77. This is a key number in the pattern. That is rising roughly at 20 handles per week. So just like I talked about, next week it's going to be 35.75. The following week it'll be 3,600. So 3,600 ultimately, which is 100 handles lower than where we are right now, will be substantial support. And I don't know that we'll get to that right now, but you'll see the other thing that's happening here is that PPM 1 is at a plus 0.63, but it's starting to fade. It's very likely, unfortunately, I'm not going to have the ability which to show you what's going on with these indicators next week, but I'll try to put some stuff out on Twitter, as I mentioned earlier, that if you're, follow me on Twitter at Portfolio Expert Noe, and if you follow me there, if I see some of these things as I'm out on vacation for the next couple of weeks, I will definitely put them out there when I see them, and I'm gonna listen. I'm a junkie on this market, so I'm not going anywhere. I'll be watching things. I don't even know how to shut this stuff off, and Jay, my son, who's following on here, he knows we went on vacation. Even back in the 80s, I was calling the office all the time trying to stay on top of things. It was pretty scary back in those days. You didn't have the internet. You had no way to stay in touch other than a few little TV stations that you might be able to find out what's going on after everything has stopped. So, but these PPMs on a weekly are also fading, PPM 1 and 2. But as we look at the pattern here, so this is what I'm talking about right here. I'm just going to box some of these things out so you can see exactly what I'm talking about. So this is PPM 1 right here, and PPM 2. You can see we're maintaining. We're in that maintenance trend mode, and then PPM 3 you can see is just breaking out right now, and it's starting to accelerate. That is tied. You can see how that 40-week moving average is starting to turn up sharply. So what this means for probably 8, 12 weeks or more, the underlying trend of this market is up. It is not down. This is not the configuration that happens when you're going to roll over, when you're going to see one of these. If you look at how all the PPMs I'm drawing in were set up back in January, you guys didn't know me back then, but what we were seeing out of our database, which I'm going to go through as well here in a minute, we were seeing massive selling in January and early February, and all of our institutional customers are calling us up like, "Hey, Bob, what's going on here? How come we're seeing all these sell signals?" I'm like, "I don't know. Market was at a top then." I said, there's some rotation, looks like it's coming, whatever. But just follow the system, stay out. So those of you that watch this channel and you're participating, you're missing. And it is a sales pitch, but you're really missing it not having this software, our WaveTech or Portfolio Expert software. You're missing it big time not having that. And we've put the training sessions behind the firewall. We're going to be releasing some of that video content as well. There's just a lot of work to running the channel and trying to make it professional and making sure that you folks get what you want out of this. But this analysis, all this stuff, becomes somewhat a moot point when you have the software. We had a bunch of folks on the training. I know last week I was on that. Jay's been running the training, doing a great job. But I talked to a bunch of them. Their guys have stopped day trading. They're making so much money running their portfolios, as I told them. And as I tell you folks every night, I'm here to help you manage your portfolios and protect your wealth. That's exactly what I'm doing through the software, not through the videos, not through YouTube videos. I'm not a hypester. I try to give you guys some solid content, and that's what we're doing right now. But all of this stuff that's happening is really mapped out well, and it comes out through all of the trade signals, and we follow nearly 17,000 symbols. So we have a vast database and a lot of metrics around it, which you guys that are watching this channel already know that. So I'm kind of preaching to the choir here. But these areas that I'm talking about, this configuration on the S&P is significant from a longer, intermediate to longer term viewpoint. It just tells us that these trends are still intact. They're not at the point where they're going to roll over like we did last time. They're somewhat vulnerable on a shorter term basis, which means we could trade down into, draw an arrow on the far right upper corner here. We could trade down in between the 10-week moving average and the 21-week moving average, but that's very unlikely at this time. The parameters that we're going to be looking at, as I laid out a minute ago, downside is probably somewhere between 3,600, 3,585 is somewhat the extreme, certainly for the next couple weeks. So let's go to a monthly graph, and then what I will do from here is I will go from looking at this graph going to we'll go through NASDAQ, we'll do Russell, we'll do the spreads, we'll talk about leadership, and then we'll go to interest rates and gold and Bitcoin. So that's the plan here. So the patterns that the patterns that we're setting up here on a monthly basis is this. This market grid that I have on the screen right now, you can see the R1 3705. So far this month, we talked about it a minute ago, 3712.39 is the high for the month. That basically is an R1. R2 is 3798. I don't think we get there in the next couple of weeks. I guess anything's possible in this market. The low this month has been 3633, and S1's 3538. We're going to see, most likely, as this thing ends, the most narrowest month that we've seen this year. Meaning narrow, meaning the amount of price movement. Right now we've got not even 100 points. Last month, if we look at last month, we had a low of 3279 and a high of 3600. We had 400 plus point, almost 400 point move in last month. All of these months, huge ranges. So this is, December has a seasonal tendency to have a little upward bias, and it also has a tendency to be pretty quiet because all these institutions are trying to set up for next year. And I'm telling you, this whole election thing, everybody's starting to set up the tone for the fairy godmother, for a new Treasury Secretary, for a new administration. That's what markets are setting up right now, and they're counting on everything that you know. They're counting on stimulus, and we're going to hear from Chairman Powell here in a few minutes. And what are we going to hear? Lending powers, not spending powers. Who has the spending powers? The Treasury. Who's going to be running the Treasury? Janet Yellen. What's going to happen? They're going to spend. I wouldn't be surprised if she tries to figure out how the Treasury can buy securities. So, maybe, there's an argument here for buy and hold. That's fine. Buy and holding indexes is kindergarten kind of trading. That's what most of the advisory industry does, is they buy and hold, and they look at pie charts, and they talk about diversification, and that's all they talk about. I don't know. I'll have to see if I can pull it off, and I'm going to bring up our portfolio expert software here shortly and show you a couple of things. I know Jay told me he built a portfolio about 4 months ago called COVID, and I think it was up, like, I forget, some crazy numbers, 180. It's up like almost 400% now. So, indexing is indexing. One of my mentors used to say, diversification is the fastest way to moderate gains and moderate losses that he's ever seen. If you want to make money, you concentrate your assets, you have a good strategy around them, and you make sure that you know how to protect the assets, whether it's through option strategies or through just getting the hell out. And that was said to me, 1983. 1983, probably, Walnut Creek, California, Northern California is where I was at a large wirehouse, and one of the guys there who I got to be very close with, and he used to preach that all the time. And his claim to fame was from 1974 to 1981, every $10,000 of investment turned into $1 million. So we called him the Professor. That was his nickname. Guy was brilliant, and we got to be really close. He's gone now, but it's the world that we live in today. I don't know what he would think about it. I remember he and I being on we used to hike on a mountain called Mount Diablo in Northern California. Used to climb that thing every weekend. And he used to say, I remember, he goes, there's going to be a day where 100 up or 100 points down is going to be just normal. And we kind of laughed and we talked about every company in the United States being listed. And that's pretty much what's sort of happening, right? And, maybe we'll get into talking a little bit about some of the IPO mania that we saw last week. That was crazy. But going back to this market here, you are looking at most likely the range for the month. I don't see us. We could, if anything, we could expand both ends of this thing. 37.12 is the high. We could print up to there. I mentioned these numbers in last night's video. 37.21 and 37.54 is the extreme potential for the next couple of weeks, as I see it. On the downside, I mentioned that as well, around 3,600 to 35.85. Okay, so that is the S&P. Let's go to NASDAQ, which is something and we're going to use the NASDAQ futures on this, and I'm going to back this up, and we're going to do the same thing, and I'm going to get through this a little quickly, try not to do any of the stories that I've been talking about. I know some of you like that stuff, but it gives it a little flavor. But we're seeing the same kind of configuration. I've talked about this also a lot, is that the NASDAQ has a slightly stronger profile than the S&P, and this has been the case. I'm going to go through this very quickly. We'll do the Russell, and then we'll do the spreads, okay? But the reality of this pattern is we're still seeing PPM 1 and 2, just like in the S&P, below their first and second derivative. But when we look at the actual numbers, we're looking at a plus 0.16, a point, and a plus 0.25. Now, anything over 0.25 is considered to be a trend. A sustainable trend also tells you each one of these PPMs are attached to a moving average, a simple moving average, 10, 21, 40. That's what you see on the screen here. So what the 0.25 on PPM2 is tracking the 21-day moving average. It's at 12,304.20 right now. And what that 0.25 tells us, that there's only a 30% probability for the market to decline below 12,304. Now, the low's been 12,572. I talked about this last night, that there's very little probability we're going to get anywhere near that number, right? But that's what that tells us right now, and that number is rising every week. So this is going to be rising in the pattern. So the support for, while Bob is enjoying life out on a vacation for the next couple of weeks, you can use two things. The 10, simple 10, don't use the exponential, not if you're following me. Simple 10, 12,505, and then the 21 is 12,304. And these are the same numbers on all of these indexes. They all have the same basic configuration. So as you look at these things, that's going to be the numbers. If you're playing the uptrend and you're owning this thing, that's fine. If you have, alert, if you have WaveTech and you're a portfolio expert, you don't need to worry about any of this, because all the models are already being attached to your individual symbols, ETFs, mutual funds, whatever they are. So you're going to already know what to do. So you don't even have to, these videos don't mean a lot to you. So anyway, let's go to the next level. Let's climb up this tree pretty quick. Weekly, same tone. Unfortunately, the dragon is starting to show his face. And typically what happens, you see PPM1 is actually cut through its first derivative down here. I'll put a cursor on that so you can see where I'm at. PPM2 is turning up. PPM3 is turning up. These trends are fine, folks. This market's not rolling over. There's no big rollover. I know every time I say that, somebody will grab this little soundbite, and if the market goes down a little bit, they're going to say, "Oh, he was wrong." There's a troll out there. He's trying to say he's not a troll, but he actually is. The reality is what I'm trying to do is give you parameters. And if you really want to know, once again, wave text your answer. So the bottom line is that what we're doing here is actually looking at these trends. The PPMs are 0.76 and 0.90. They are 3 times, 4 times almost the minimal value that you need to have to say we're in an uptrend. So I'm a trend follower. I'm an Elliott-tician. I've got all of these everything I do is proprietary. So you're never going to see the MACDs or a relative strength. It's not that you can't use those things. I gave those up back in 1983, I think it was. I stopped looking at all those things. And I always tell people, any indicator you have that's a 0 to 100 meter, throw it away. Rate of change is okay. Anything that can keep going up that measures the momentum is probably okay. But you can't use stochastics and all those kind of things. There are times when they're incredibly useful, but then there's massive amount of times where they're worthless. So, but this pattern is set. We got weekly intermediate uptrends. That's all real. If we go out to the monthly now, same configuration. What's likely to set up here, and I talked about this, I think 2 or 3 videos ago, is that these markets are going to get locked into a 3-month at least sideways range. It's going to be a broad range. If you just look at the market grid here on the chart, I don't have any way of blowing this up. So if you're on an iPhone or something watching this, it's not going to be very helpful. But the rebroadcast, hopefully you can get it on a bigger screen. But the STX for the month of this month will be very similar next month because of this low volatility. In fact, it's likely to contract just a little bit because the last 3 months have been so big. We're going to see the grid start to narrow down just a little bit when it gets recalculated for January. This is the monthly chart, so that's going to squeeze down a little bit, and it's going to start to form kind of the beginning of a dragon head, which tells us that we're going, but it's still going to be a broad range. So it probably won't be 10,750 to 13,000. It'll probably be closer to maybe like S3 or even an S2, 11,515 to maybe something like 13,004 will be the projected range for January. And so when that number comes in, that's going to give us a lot to look into. I see the S&P is just about to go negative here. It's up 12 cents on a day. I just happened to glance at this thing. So we're seeing this thing sell off just a touch over here. But this is what's likely to happen. So let's go next and let's go to Let's go ahead and let's see. Yeah, we're going to go to the Russell, and we're going to use the futures on this one. And I'm going to back up. We're going to go to the daily, and then the next event we'll go through the spreads. We'll talk about leadership changes, interest rates. I think will be next after the spreads, and then we'll do the dollar and Bitcoin. So as we look at this, we did get on a daily, we got an RXT Sell signal yesterday on the Russell. We got it across the board. We got it on the Russell. We got it on the E-minis, the SPX, and the NASDAQ. So all of these markets should be sideways for a couple of days. We're like I said, we're seeing a little bit of acceleration. On the downside, the SPX just turned negative. Dow's down 100. Composite's still up 20. It looks like this thing's trying to make a little bit of a turn, maybe ahead of the Fed, and we can go from there. Matter of fact, the Fed already just announced, and this time change has still got me screwed up forever. So 210, yeah, we probably just had this stuff come out, right? So that's probably why we're seeing some selling coming out. That's okay. We'll see what we can do in finding it out. Yeah, see, maybe you guys gave me a heads up and I didn't see it. I wanted to have that commentary out there when I was going. So, yeah. So whoever's asking about real trading, we actually are involved in managing the upwards of $15 billion. So, yes, we do this through our institutional clients and a lot of things. So, yeah. So, damn it. I wanted to be on that, have that call open. So I knew I was going to get deep into a rant and miss that one. So that's okay. You guys are going to have to be my, I see, yeah, you're probably right. We'll try to tune in at 2:30 here. So we'll listen to Powell's statement. That is probably better than reading what Steve Leisman says, who's pretty worthless economist at best. So let's do yeah. So let's do that. I will cut loose. I'll get this thing set up so we can get Powell on screen, and that's yeah. I'm sure exactly, Gino, that there's nothing new. So yeah, I mean. They're going to tell us the same. And when Powell comes up with a statement, he's going to tell us, yeah, $80 billion a month. Yeah, thanks, John Chang. $80 billion a month in agency. Yeah, they're just going to keep doing what they've been doing. And I'm telling you, our girl's coming to town. The fairy godmother is coming. And I've been telling you folks, I know there's a lot of you that have followed me for a while. I've been telling you that it's a two-punch deal. You got to have, and Powell said this back on March 19th. He said this. He said that they need monetary and spending to engineer some sort of recovery. Now, let's face it, the recovery has been very selective, right? If you're in the right place, there's a lot of people in this country who are doing better than before COVID hit. And there's a lot of folks that are destroyed because of COVID, right? Let's face it, hospitality, there's a lot of folks, their jobs aren't even coming back. And now those infamous folks in New York State are shutting down indoor dining, which is going to destroy whatever was left. It's crazy. Yeah, you gotta watch Dave Portnoy's little rant. He's absolutely right. But the bottom line here, as we're looking at this, is that this pattern that's unfolding here on the Russell is exactly how it should look. We're down a little bit. As I tell you, when you get an RXT sell, we have seen RXT sells that have been signals for major tops. We saw that on 9.4, 9.9, whenever that September top came in. It was a classic RXT sell that led to something bigger. And this is one of the things I talk a lot about. We had that outside reversal trade. It lasted for about 3 days, and it got stopped out with a small profit. But that's how these trades work. Sometimes these reversal trades end up to be giant trades, and you just have to follow the rules and walk through them to find out. So you get an RXT sell that leads you down, and in the case of the RXT sell in September was also the time when Tesla was splitting, Apple was splitting, all of those things were happening. And so the market got super loaded up, and they keep loading this market with all these IPOs. It's sort of interesting. You got stock buybacks behind the scenes no one talks about. And then you've got all the IPO action coming, and all these companies that are perceived to make money, that the valuations, and we'll talk about that later. But staying with this daily signal, they only usually suggest that you're going to go to S2, maybe an S2 number. The low is 44. We're just about to S2. And typically they go to S2, and possibly we could move, depending on how this thing closes today, we could move down to an R2, or I'm sorry, S2, and maybe an STX for Thursday's market and maybe move down into the week. We'll see how this thing plays out. I think actually if the stimulus happens, that everybody's going to go, okay, it's over. You know, we've been hearing about this stuff for what, 4 or 5 months, something like that. So, yeah, it's interesting also on the asset buying. Some of the authorization that's expiring here in a couple weeks is the Fed never used much of it. In fact, I think they only used $100 billion of a couple of the programs that they were authorized to use $400 billion. And the Fed is really good at convincing, and this is their job, is convincing the markets that they have a backstop. So the free markets, especially in the bond market is so huge, it's crazy, especially on the sovereign side, but everywhere. It's just giant. It's always been 4 or 5 times bigger than the equity markets. Equity markets are child's play compared to both currency is the biggest commodity market on the planet, and then you have bonds, and then equities are somewhere down the trail. Equities just get focused a lot on. But let's go to weekly here. I want to get through this as quickly as I can here. We're almost into the show, about an hour. But we're getting this little rounding situation. We're seeing on the weekly Russell futures, we're seeing some acceleration on PPM1. PPM3 is just really exploding. And you folks know, let's see here, this was back in July. This is when I was telling everybody, focus on the small cap market. This is where the money's going to be going forward. And there was still nice money in the NASDAQ, don't get me wrong. But this had to happen for us to end up where we are right now, year end, having this crazy good market year in the middle of an economic disaster. So there's going to be a lot of books to come out after this one. So we got 12 minutes to go to that. Yeah, I always forget to eat too. That's the problem if you're doing keto. You don't get hungry. Okay, yeah. So they're accelerating a little bit. See, futures are starting to accelerate down just a touch, down 3 handles. There was a mismatch on the close yesterday, so net about maybe 2 handles difference in the futures versus the cash. So cash is going to catch up here a little bit. We should print down just a touch more. So let's go and look at the weekly here on the Russell. Same thing, accelerating, huge uptrend. This thing's not going anywhere. The thing that's likely to happen here is going to be just a high-level consolidation. But as we go to the monthly on the Russell, this is where it starts to get interesting, if it will come up. There we go. We actually got an RXT Sell last month. This thing is so explosive. And they typically, on a monthly, on an explosion like this in this market, with PPMs accelerating like this, the RXTs aren't going to work. When we had the RXT Sell on all of these markets the other day on a short-term basis, all the PPMs were actually below their first and second derivatives. That's another element that you should know about that's out there. But but if you look at the yeah, Gino, I see you eat value stocks for lunch. That's awesome. You really should. I don't know that you're a subscriber of ours, but you should be, because we have something called the magic value or something. I'll bring that up in a minute because it's something good. How long we got? 10 minutes. So I'm going to finish with this Russell. We're going to try to tune in, and we're going to take a Fed break here in a few minutes. Hopefully I can get this all set up. You guys will have to give me just a minute to set things up, and we'll bring it up on YouTube TV and see if we can I can get this thing tuned in here. But yeah, so as we look at this for the month of December, RXT is 2040, so we're at 1974 high so far this month. We look at R3 1988, so we might be able to print R3. So as we start to talk about what's likely to happen for the balance of the month and going into year end, that's probably going to be the range. 1988 is going to be on the upside. If you look at the low 1815, we never even got close to an S1, and this was the case for all these markets. Now, the market grid on the Russell will actually expand in volatility this month, because if we look at the last 3 bars, it's going to definitely expand, and we should see it turn up when we come into January. So that's something I'll talk about on the January videos as we come into the beginning of 2021. Say that out loud. And I was joking with somebody I was talking to yesterday that I'm still waiting for Y2K to hit. Nothing ever happened, right? So it's kind of funny. We actually did a huge update on the software back in those days, thinking that everything was going to go crazy. Well, it obviously didn't. So anyway, but this is the range for the month. Next month, as we come into January, the expansion will be very obvious, and you'll see it when I do the video. I guess when is it that this is going to happen? Yeah. So anyway, yeah, I think it's the 4th is the first day that's when I'll be back. So they're trying to bounce this market a little bit. So let's see what time we got here. 8 minutes to go. Yeah, Kevin, we'll try to get into the financials a little bit as well. We're just going to continue this show today and talking about all the things that are relevant. This is really, I think, an important live cast for me, because I need to set up a lot of things just because I'm going to be out of town. Yeah, Pierre, I agree that most of this stuff is garbage, but there's actually some good stuff. Yeah, well, we're going to get to individual stocks, but it's going to be sketchy. It's probably going to be an hour from now before I get to doing any individual stocks. So let me get set up. You folks watch this thing. I'm going to turn the sound off, see if I can get set up on the other screen, and then I'll be watching for Mr. Powell to make his comment. So give me just a minute to get set up here. Because I could put some music on, but this will only take a minute. I've already got this thing set up here.
Action up.
And I just need to turn the sound off so that I can see what's going on, and I can bring this over on screen here in a few minutes. So we'll continue on here. I think we might have time. Yeah, I don't want to get into it. Yeah, the PPMs do work on a 1 minute. In fact, this chart right here, this is PPM 1 on a 1 minute, and yeah, they're quite useful for any level of trading. And if I could express my frustration with TradeStation and getting the PPMs and getting my indicators out there, I can't even begin to tell you how frustrated I am. I do have someone working on it. Hopefully it's going to get done, and by the first of the year, you guys will have to get on the TradeStation platform. But I'm also working on a project to rebuild our software so that we can have a real-time platform and have PPMs on our own. I really don't want this stuff distributed all over the place. It's a lot of, it's my life work, my legacy, if you will. So I'm not ready to throw them out there. And I did back in, if you would have met me in, I guess, 1992, when we did the first, it wasn't TradeStation then. I guess it was. They did have TradeStation. But we did a super charts, and we did another offering that was something that was out there way back in 92, 94. We used to sell the indicators, the models, all that stuff. Unfortunately, there was no way to get the message out. It was quite expensive. We didn't have the money to do it. So anyway. Yeah, so we're about 3 minutes out. They're in commercial break right now, so we'll have this up here in just a minute, and we'll see what Jay Powell, the man of the year, the savior, will have. Yeah, so I just put this over here. So we'll watch Jay Powell as they come out here in just a couple minutes. I need to set up one more thing, make sure you folks will be able to hear the sound. So while they're in commercial break, if you folks will let me know, I'm going to turn the sound that you're hearing the sound so that we make sure we hear this.
They're secure, orderless, and unlike gold, they actually have utility. Leave the pack behind. It's time to drop gold. Go digital. Go grayscale.
3 meetings and 3 stops today. You're just never.
So were you folks able to hear that? Yeah, let me know. Okay, cool. When the man himself comes on, we'll listen to his statement. I think it's about maybe 2 or 3 minutes. I think it's worth, and we can chat about it, see if anything comes out, take some notes. Interested in your guys' takes as well, guys and gals. We can definitely take anything up there. We'll spend a few minutes if there's anything interesting and all that. So we're breaking news. Yeah, so anyway, yeah, we'll just keep the sound off. This guy, forget who he works for, but yeah. Yeah, so we'll get me on screen too, so I can give you a crowd reaction, whatever. So, yeah, this guy, I think his name, yeah, David Kelly. Yeah, so Dow's down 100. You can see here on the screen. Everything that we'll see what Powell has to say. I'm interested in his statement and how many times he says we have lending powers, not spending powers, and there's we'll use the full force of our toolbox or something. He's got a couple statements, so we'll have to. I'm going to be taking notes of how many times he says this. So I think we should be coming up with him any second right now. So
The best way to do that is sound concerned right now, so I don't expect him to sound too bullish here.
Yeah. Well, David, it's been great to have you as always here as we await Chair Powell to come out. I don't expect there'll be any bombshells here whatsoever.
Yeah. Yeah, it's interesting, Pierre. And just looking at the chat line, here we go. Oh, shoot.
Beginning of the pandemic, we've taken forceful actions to provide relief and stability, to ensure that the recovery will be as strong as possible, and to limit lasting damage to the economy. Today, my colleagues on the FOMC and I reaffirmed our strong forward guidance for interest rates and also provided additional guidance for our asset purchases. Together, these measures will ensure that monetary policy will continue to deliver powerful support to the economy until the recovery is complete. Economic activity has continued to recover from its depressed second quarter level. The substantial reopening of the economy led to a rapid rebound in activity, and real GDP rose at an annual rate of 33% in the third quarter. In recent months, however, the pace of improvement has moderated. Household spending on goods, especially durable goods, has been strong and has moved above its pre-pandemic level. In contrast, spending on services remains low, especially in sectors that typically require people to gather closely, including travel and hospitality. The overall rebound in household spending owes in part to federal stimulus payments and expanded unemployment benefits, which provided essential support to many families and individuals. The housing sector has fully recovered from the downturn, supported in part by low mortgage interest rates. Business investment has also picked up. The recovery has progressed more quickly than generally expected, and forecasts from FOMC participants for economic growth this year have been revised up since our September summary of economic projections. Even so, overall economic activity remains well below its level before the pandemic, and the path ahead remains highly uncertain. In the labor market, more than half of the 22 million jobs that were lost in March and April have been regained, as many people were able to return to work. As with overall economic activity, the pace of improvement in the labor market has moderated. Job growth slowed to 245,000 in November, and while the unemployment rate has continued to decline, it remains elevated at 6.7%. Participation in the labor market remains notably below pre-pandemic levels. Although there has been much progress in the labor market since the spring, we will not lose sight of the millions of Americans who remain out of work. Looking ahead, FOMC participants project the unemployment rate to continue to decline. The median projection is 5% at the end of next year and moves below 4% by 2023. The economic downturn has not fallen equally on all Americans, and those least able to shoulder the burden have been the hardest hit. In particular, the high level of joblessness has been especially severe for lower wage workers in the service sector and for African Americans and Hispanics. The economic dislocation has upended many lives and created great uncertainty about the future. The pandemic has also left a significant imprint on inflation. Following large declines in the spring, consumer prices picked up over the summer, but have leveled out more recently. For those sectors that have been most adversely affected by the pandemic, prices remain particularly soft. Overall, on a 12-month basis, inflation remains below our 2% longer run objective. The median inflation projection from FOMC participants rises from 1.2% this year to 1.8% next year and reaches 2% in 2023. As we have emphasized throughout the pandemic, the outlook for the economy is extraordinarily uncertain and will depend in large part on the course of the virus. Recent news on vaccines has been very positive. However, significant challenges and uncertainties remain with regard to the timing, production, and distribution of vaccines, as well as their efficacy across different groups. It remains difficult to assess the timing and scope of the economic implications of these developments. The ongoing surge in new COVID-19 cases, both here in the United States and abroad, is particularly concerning, and the next few months are likely to be very challenging. All of us have a role to play in our nation's response to the pandemic. following the advice of public health professionals to keep appropriate social distances and to wear masks in public will help get the economy back to full strength. A full economic recovery is unlikely until people are confident that it is safe to re-engage in a broad range of activities. As we previously announced, we are now releasing the entire package of our SEP materials at the same time as our FOMC statement. Included in these materials are 2 new exhibits that show how the balance of participants' assessments of uncertainty and risks have evolved over time. Since the onset of the pandemic, nearly all participants continue to judge the level of uncertainty about the economic outlook as elevated. In terms of risks to the outlook, fewer participants see the balance of risks as weighted to the downside than in September. While a little more than half of participants now judge risks to be broadly balanced for economic activity, a similar number continue to see risks weighted to the downside for inflation. The Fed's response to this crisis has been guided by our mandate to promote maximum employment and stable prices for the American people, along with our responsibilities to promote the stability of the financial system. As noted in our statement on longer-run goals and monetary policy strategy, we view maximum employment as a broad-based and inclusive goal. Our ability to achieve maximum employment in the years ahead depends importantly on having longer-term inflation expectations well anchored at 2%. As we reiterated in today's statement, with inflation running persistently below 2%, we will aim to achieve inflation moderately above 2% for some time, so that inflation averages 2% over time and longer-term inflation expectations remain well anchored at 2%. We expect to maintain an accommodative stance of monetary policy until these employment and inflation outcomes are achieved. With regard to interest rates, we continue to expect it will be appropriate to maintain the current 0 to 1/4% target range for the federal funds rate until labor market conditions have reached levels consistent with the committee's assessment of maximum employment, and inflation has risen to 2% and is on track to moderately exceed 2% for some time. In addition, as we noted in today's policy statement, we will continue to increase our holdings of Treasury securities by at least $80 billion per month and of agency mortgage-backed securities by at least $40 billion per month until substantial further progress has been made toward our maximum employment and price stability goals. We believe the increase in our balance sheet this year has materially eased financial conditions and is providing substantial support to the economy. Combined with our forward guidance for the federal funds rate, our enhanced balance sheet guidance will ensure that the stance of monetary policy remains highly accommodative as the recovery progresses. Our guidance is outcome-based and is tied to progress toward reaching our employment and inflation goals. Thus, if progress toward our goals were to slow, the guidance would convey our intention to increase policy accommodation through a lower expected path of the federal funds rate and a higher expected path of the balance sheet. Overall, our interest rate and balance sheet tools are providing powerful support to the economy and will continue to do so. The Federal Reserve has also been taking broad and forceful actions to more directly support the flow of credit in the economy for households, for businesses large and small, and for state and local governments. Preserving the flow of credit is essential for mitigating damage to the economy and promoting a robust recovery. Many of our programs rely on emergency lending powers that require the support of the Treasury Department and are available only in very unusual circumstances, such as those we find ourselves in today. These programs serve as a backstop to key credit markets and have helped to restore the flow of credit from private lenders through normal channels. We have deployed these lending powers to an unprecedented extent, enabled in large part by financial backing and support from Congress and the Treasury. Although funds from the CARES Act will not be available to support new loans or new purchases of assets after December 31, the Treasury could authorize support for emerging lending facilities if needed through the Exchange Stabilization Fund. When the time comes, after the crisis has passed, we will put these emergency tools back in the box. As I have emphasized before, these are lending powers, not spending powers.
There it
is. The
is.
Fed cannot grant money to particular beneficiaries. We can only create programs or facilities with broad-based eligibility to make loans to solvent entities with the expectation that the loans will be repaid. Many borrowers are benefiting from these programs, as is the overall economy. But for many others, getting a loan that may be difficult to repay may not be the answer. In these cases, direct fiscal support may be needed. Elected officials have the power to tax and spend and to make decisions about where we as a society should direct our collective resources. The fiscal policy actions that have been taken thus far have made a critical difference to families, businesses, and communities across the country. Even so, the current economic
There he goes,
downturn
setting
is
up
the
the
most
fairy
severe of our
godmother.
lifetimes. It will take a while to get back to the levels of economic activity and employment
He's
that
setting
prevailed
up
at the
the fairy
beginning of this year.
godmother.
And it may take continued support from both monetary and fiscal policy to achieve that. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We are committed to using our full range of tools to support the economy and to help assure that the recovery from this difficult period will be as robust as possible. Thank you. I'll look forward to your questions.
Thank you.
Okay, that was getting pretty boring, have to admit, right? He did manage to get it all in there, though. He did make sure that we know that the Fed is got lending powers, not spending powers. The fiscal, he was setting up, everything that I was talking about earlier, the spending. So I've talked about this before, the monetary and the spending powers work hand in hand. And we saw the markets rally, the algorithms. You were watching the algorithms, and I kind of flashed it on, off and on the futures. You're watching the algorithms bid this market up and as he goes through the Q&A, which I don't think I could stomach it. I may try to look at it later this afternoon, maybe listen to it. I've got a short trip Aaron and I have to run after the show today, and we'll see. But yeah, it looks like this thing's starting to get a little toppy up here right now on the futures. We went back to pretty much where we were earlier. So all the selling that came in after the statement, all this stuff, yeah, I don't know. We spent almost 12 minutes of our time on there. So we need to dig back into what we were doing before, because I try to watch this, but it's very difficult because all the government lines were in there. Wear your mask, do all your stuff. It was all messaging everything as we knew it would be, right? Yeah, what about the $1 trillion in treasuries doing in a few weeks? So what's $1 trillion really? They just write the money. I mean, they're going to refund all this stuff. There's so much money out there to do this stuff. It's crazy. So, yeah, that's not a big deal. I know the trillion word sounds like a big deal. Turnover is in 20 times that on a daily basis almost. So, not really a big deal. Yeah, in and out Wednesday, probably right. I have to go up and do some other things, but that's probably in my future, is an In-N-Out burger. Those of you in the U.S. or in the Western U.S., I hear they're moving to, I don't know, somewhere in the Midwest somewhere. So they could take over the whole world. But yeah, so we've seen this thing flip. We're up 10 on the S&P now, 3704.64. The high's 3712. We talked about this. Last night's video, I also discussed that I thought we could see maybe we could see maybe 3721, 3754, all that stuff's in there. Whether it can extend, like I said before, follow me on Twitter. I'll do my best to update if I see anything out there. I will be doing analysis every day. I just won't. There's actually going to be some time where there's not even going to be a real internet there, which is kind of scary, for multiple days. So I will be on a large ranch, and there's some spotty internet. I may be driving into town just to get a fix at night. So I'll stay on top of this stuff the best I can. So I think that the everything that we're talking about is still stands. As far as what the Fed just said, anything he's going to say, I mean, you know, I think the thing that irritates, I don't know, maybe it's me, but his smacking of his lips just make me crazy when he's talking. So anyway, probably the best guy ever. I know a lot of you guys are younger, but Volcker was like, he was a slayer. I mean, he was just so aggressive. It was amazing to watch him. I had the pleasure. That was the first real Fed that I watched at a very close level was. Hang on one second. I get something really weird going. Oh, I see what's going on. Okay, that was me. Sorry. But yeah, just being able to watch and live through Volcker, and then Greenspan, and then, you know, then Helicopter Ben, and then Grandma Yellen, and then this character. You know, all of these folks, by the way, are all wealthy, very wealthy people. Powell is not a poor man. He's not working for a government salary. So he gets a salary, but that's not what keeps him going here. So anyway, yeah, so I'm just trying to get back into flow. Sorry for the disruption. I thought it might be interesting. Yeah, so that's interesting. I thought it was KC, Fire Lord 84, that just got a in and out. And so, yeah, good for you guys if you're by that. Yeah, we're going to get back into, the next thing I'm going to do is interest rates, dollar, Bitcoin. Okay, so let's dig into it and get there right now. So one of the things that I have been talking about forever, actually, let me go over to we're going to go to weekly on the 10-year to start. I'll keep an eye on the S&P in case they get crazy and punch through new highs and stuff, and we'll flop over. But the 10-year is going to continue to rise. I've talked about this for months, going back to July. I've been telling you guys there's not going to be zero rates in the U.S. and Ray Dalio and all the characters out there predicting the depression and everything. No, I think Dalio's telling you how great China is and how to invest in China and do things. And, there's probably some money to be made there. Maybe he's not wrong, but it's definitely not going to be a depression. They will use MMT, modern monetary theory, and that's one of the things. I don't want to get into that now because I'm going to get to the analysis. Maybe at the end, if you guys remind me to go on a little rant about MMT and what the effects could be if it's really put in play. And I actually think that is where we're probably going, and that will be a theme that will start to show up in my videos and live streams and everything that we do going forward as we go into 2021. So but the interest rates are going to continue on a 10-year moving toward 1%, probably 1.2 is going to be a cap somewhere in there. So my guess is 80.8 to 1.2 is going to be a range. We're going to be locked there. When we look at the monthly graph, so this was a weekly, if we go out to monthly, that put us up to the 21-month moving average. That's going to be a lot of resistance. This is a very long-term chart, so I don't expect to see anything. I don't expect to see anything of substance of going above that 1.2 number. And above that number, it would get scary for the Treasury. So we're trading 705.77 up 11.77. These are new highs on the day. So definitely we've got a bid coming in here right now, and the algos want that 12 number. Trust me, they want to bust out of 12. That's for sure. So we'll see what we get out of here. So we're 06 printing right now. So we're definitely starting to print this thing through on the upside, and this is what they want. Money flow, the algos, everybody's on board here. If we look at the one thing on the treasuries here on a monthly, if you look at PPM1, it's just spiking through. This is a big event that's happening here on interest rates. So somebody mentioned the financial. Once I get through this section here, we're going to go to the Dow. This is pretty much it on the 10-year. But we'll talk about the Dow next, and then then like I said, we'll do Bitcoin. Then we'll talk about the financials, because I think there is a play there, and I'll probably look to bring up some of our software, and we can talk about how you can do some of these things as far as that, how to actually deal with this stuff. There's a very complex world, and for those of you that just trade some index futures and stuff, I mean, you're missing the real money, okay, in this stuff. So anyway, anyway, all right, just looking at chats just for a second here. That's funny. Yeah, Borgsley, I've been on Chinese airlines. I spent a month in China many years ago, and they weren't wearing masks, but it was an interesting experience for sure. It was much different than flying on U.S. airlines. Okay, so let's go ahead and let's go to the Dow. The Dow loved everything you just said. And I started talking about this. Let me get over to the daily. And a couple of nights, I think 2 videos ago, it wasn't last night, I didn't cover the Dow, but I did talk about the bottoming pattern. It looked like we were setting up. PPM's already starting to roll here. This is going to be an interesting event from the standpoint of what's going on with the on the configuration of the Dow here. Is we're going to start to set up a low. This isn't anything big, but it's also interesting that on a relative basis, we've seen gold hang in there, which I'm going to cover as well. I said I missed out on gold, so I got to slide gold in. These markets will go pretty fast, but the Dow on a daily this is where the real action is here, is on the weekly. We're starting to see the PPMs turn on PPM 1 and 2, got a lot of work to do. There's a ton of resistance around 91 and a half, 91.80. That's going to be the ceiling. So it's not like there's a big turnaround, big bullish run coming in the Dow, not at the moment. But we are starting to set up the first signs of a stabilization. And like I said before, and this is not a political statement, we're going from America first and trade wars to America last, and back to globalization. That's just the reality of what's happening here. And you can almost see it through everything that Powell was trying to address a few minutes ago, in that we're really seeing a lot of people, it wasn't distributed fairly. And I said this in the beginning of the show, some folks are doing way better than before COVID, and many are actually have been destroyed, especially in hospitality and travel, and you know where, and there's also the lower tier of the market. So what's being created right now is the biggest equality gap ever, and all the policies that it appears that is being promoted going forward are going to increase that to make it even more dramatic than it has been. So. It's going to be a very interesting next period of time to watch this unfold. But the markets, as far as the markets go, everything, like I pointed out, I will go through an MMT run, hopefully, by the end of this show, because I really want to document some of these thoughts that I have out there. And so, anyway, but we go to the monthly finally, and on this, and we're getting down. The lowest that we got back in 2018 was down at 88.25. We could see a retest. This line that's at the bottom is the 200-month moving average. We could see it move down to that line. That is 86, 87. But I think this 88, 86 number is probably the target for the dollar. And so let's just go from there, and let's just click right over, and let's go to gold here real quick. And I want to go back to the daily gold, and just and I cover this every night, so I'm not going to spend a lot of time on this, but I do want to set up the end of the year scenario. We traded up toward that 1867 is the 40-day moving average. I talked about us getting up there. We printed 1869.50 today, so we've hit that number. We're seeing the PPM starting to fade a little bit, but we definitely have seen a bottom. I drew in last night's video. If you didn't see it, watch the very last section, probably the last 3 or 4 minutes of the video. I covered gold in detail, but let's go to the longer term aspects of what's going on here. And I've been talking about this, as I believe we're setting up a substantial low in gold here at these levels. I think that print down to 17, let's see exactly what it was, 1767. That was the low of this pattern. Now we're going to see a multi-week, probably more multi-month setup that will ultimately start to move us back toward the upper ends of this Fibonacci grid. I'm just going to move these numbers around a little bit here on this chart, but maybe getting into a 50%, 1928. I mentioned that number last night. Start to move up into the 19 handle again, maybe into the next level would be 1985. That's a little ways off. There's so much resistance overhead around 1920, 1918. That's going to be the top end. But let's look at the monthly, because that is going to give us a little better picture. This little formation that we have here, we're trading below the 10-month moving average, and the 10-month moving average is at a plus 0.131. So I want to show you something, and I talk a lot about this, and this only time it normally happens is on a monthly chart. And what happens is we close below the 10-month moving average that was rising sharply, vertically almost. It's at 1.31, so it's 0.25 is a bullish over an uptrend. So this thing is at 0.130. It's multiples. This is a very strong trend, and typically I would tell you there's less than a 10% chance of it closing below that. Well, we did that 1 out of 10, but that was it. I mean, we basically we double bottom. We had last month's low of 1767.20, and then this month's low 1778. So we basically double bottom here, rallied right back above that 10-period moving average. When you see this type of pattern like this, with a hard rising up moving average in a pattern, you're going to rebound at least back to that average and get back above it and start to participate with that trend that's in that underlying average. I would actually consider myself to be an expert on understanding moving averages, and especially when the ones that I've followed since 1984, which is this 10, 21, 40 period moving average. So I understand the configurations, how they set up, what they're likely to do during these periods of time. And if you stay disciplined, it'll lead you to the right place. Now, the market grid is going to actually expand a little bit as we come into January. It also should turn up. And if you notice here on the PPMs down below here, put a cursor around on these, that they're all turning up. And this is a very positive sign for longer term. Now, when we printed that high up there at 2095, that will be the high for, I would say, the better part of 2021. So what we're going to do is trade into that 1920, maybe 1980. We're going to backfill. There's a ton of work. We're looking at, just on bars, we're looking at least, I'm going to estimate at least 6, 8, maybe as many as a year or more of activity in this pattern on a monthly before you're going to see gold make any big giant moves. Now, that can change, but the way it's set up right now, this is what it looks like is going to happen. we're going to see retracements back from this 1770 level up to the that 2095 highs. You're going to see that happen. So that's definitely as far as gold goes. Okay, so just continuing on here, let's cover Bitcoin. Let's go to daily. And I know I think I see some wave techers hanging around on the line. If you know the what's the symbol for the is it an ETF for Bitcoin? If you guys know that, I don't know all these symbols. I don't know the ETF symbol. So if anybody knows that, that'd be awesome. Yeah, it must be a Eulides time cycle thing. I see you, Borg. I know you follow him. Anyway. But we're seeing this Bitcoin just blow out on a daily here, right? So PPM 1, 2, and 3, they're all breaking out simultaneously. This is the beginning of a move, not the end of the move, okay? I know we're up 7.2% today. Thank you. Thank you, D. Yeah, we'll take a look at that here in a minute. But we're still trading 05, 37, 05, 72. So we're still trading around there. I think we printed an 06 number. But we'll continue on here as far as Bitcoin goes. Let's go to weekly because this was something that I was talking about. I'm going to put the Fibonacci projection tool out, the WaveTech Fibonacci projection out here. Let's just do that. And this was the projection. I talked about these last time. You'll see them in this box here. Let me go down. So the minimum was 18,423. The next level, high target 2, 21,698. And I did do a video a month ago or so telling you that the target, talking about these targets. 23,721 is the Fibonacci target. And the only thing that we've got working here as we look at the market grid on this thing is on a weekly basis, R3 20,007, hang on here. R3 is 20,876. We're at 20,894, so we've hit an R3. The RXT number 21,418. So that would be the RXT number. We do have Fibonacci projections above this thing. The PPMs are off the map, a plus 6.0, 3.78, 3.57. I've been talking about this for a while. So I'm going to bring up I'll bring up WaveTech here. Bear with me 1 second, just coming up. Guess it helps if I get the symbol right. So the buy signal that we had here, and I can show you this in the other, was back at 1150. It's up 102% right now off this last signal. They're basically 1733 is the next support. There's not a lot there, but this signal had you in. I'm not sure if we flip over to, yeah, it's interesting. Daily got knocked out. One of the things that we could do is run a multivariate where you're trading. Daily came in on the last trade here. Let me just bring this up. Yeah, the last here's the last, going back to September of 19, made a little bit, made 5%, made 48, 31, 75, and now it's up another 100% on this trade. But yeah, so Bitcoin's been an interesting one to follow, to say the least. And this projections that I'm showing you here in TradeStation is most likely where we're going to go, but we're going to see these upward numbers toward here. Let's go to the monthly. There's not a lot of data on this platform, so I'm going to bring this up, but the monthly market grid reveals that RXT is 23,467, so it's up there, saying that maybe we could see that based on the monthly chart. We could see that. So this is an all-time new high. I remember when I reviewed this last time that I did not think that the old highs that we had just on this platform shows the old high 19,707. When we had the objective, I was talking about a 18.4. So there's no way if we get that close to the old high, they're not going to render a new high. This is way too big of a platform to have it stop like that. So psychology is going to push us up. As we look at R2 21,414, that would be into that range that we just talked about on the weekly. R3 22,498, that would also push us in. That's a big number. Then here's the 23.4. So those of you that followed me for a while know that I look for clusters of numbers. So there's all types of numbers up and around the 23 number. So there will be a correction, but not probably until between this R3 RXT number between 22.5, 23.5, just rounding numbers off is going to be where this thing is going to go for sure. Now, I kind of got off track here, and I'm going to go back. One of the things that I said I would talk about was the spreads, and I'm going to bring up the Russell NASDAQ spread. I've been promoting this since back in July when this thing got down really, really cheap. It just looked like to me that this was a structured bottom pattern. Those of you that maybe haven't followed me a lot, but have started following me, I have been a big spread trader for a lot of years, going back into the 80s, and especially with the banks, when I worked with the banks and their proprietary trading rooms. I've told you folks before, banks don't take any risk. They play spreads. They don't take risk in the markets. They're very low risk takers. They make insurance companies look like risk takers. But they just don't expose themselves very much to the markets. They're not big on that. So everything is highly calculated, and that's because of that experience I had for multiple years in working with banks and trading rooms and hedging programs and things of that sort in interest rates. It kind of got me into being a really decent spread trader. So what we're seeing here on the spread I have on the chart is a major bottoming. We're going to take it out and go. This is a daily pattern. We're going to go weekly and monthly just so you can see what this looks like. The weekly time frame, you can see this thing has been declining since 2017. There's been an underperformance of small cap stocks since 2017 until recently, over the last couple months. Finally, this is the first time I've seen structure that I would call a bottom. And I've been watching this spread very closely, and I had a thought that we need to start to look at. I will cover this later. but the um, the patterns that we're going to see fold out of this, we're going to move back into this consolidation up here at these levels, and that just tells you more leadership change. There's going to be the small and mid cap stocks are going to be in play, and whether they're value plays or not, maybe growth, and that's something I'm going to take this off screen. So I just want to bring something up on the other screen. I'll bring it over once it comes up. So just bear with me 1 second while I'm doing this. Yeah, so, but this spread is, let's go to monthly just to take a look at this and just so you can get a better feel. You can see monthly, this is the first turn on a monthly that we've experienced. And this is substantial on this turn. It's one of the more definitive ones. We had one back in 2017, but it's been all downhill. This looked like we were going to get a bottom back in 17, but everything broke loose, and that had a lot to do with the decline in interest rates that caused that. Now we have, as we just covered just a minute ago, I talked about the interest rates going to increase. We see the 10-year up to around 1.2 or so. I didn't cover the 30, but it's gonna do better. I guess in real terms, it's going to do worse. There's going to be more of a spread increase on that level. But this Russell is being driven by this switch and these higher interest rates, which are going to bring in the financial markets and specifically the banks. Maybe the regional banks are going to be a better play because they're going to be some of the small and mid cap players, not so much the big mega banks, the big money center banks. In fact, I think the disruption that's going on in fintech, I wouldn't want to be a major bank because these guys are going to get hammered. So we're back to 3702 trading on the S&P, so we're fading a little bit. You know, I mean, that's all you're going to get out of the Fed. We'll see if they come up with a stimulus deal, if we can even get a bounce from that. But I'm just going to flip over here for a second to the yield curve, and this is the 530 yield curve. You can see it's way up here. So this is the configuration we're going to continue to see on all of these interest rate markets. This is what's driving the investment in the small caps, the financials. All this stuff is going to be driven by that mode. What time we getting to be? So we got about 45 minutes to the close. This is the 1030 spread has flattened out a little bit. It hit a peak. We made a new peak a few weeks ago, and now we're just kind of flattening out again. But it's going to stay at a reasonably high level. The big play is in the 530s and maybe the 210s. I don't have those up here. Those are going to be where a lot of the movement's going to happen. And what this is really telling you, not that you need to trade these things or anything like that, what this is going to tell you is what the structure of the yield curve and how it's going to affect these financials and profitabilities in the banks and all of those type of things. So that's the thing that you're going to be looking at. And one of the things I wanted to show you, and I think I just brought up the Portfolio Expert website, and when we go to, I'm going to show you under support, I want to show you stock screens, because this is the essence of what you're going to need to be doing when it comes to investing going forward. You're going to have a way to select these stocks. So what we have, and these were defined by all of these parameters and these spreads, these screens were set up through a CFA that worked for me for quite a few years, and we put all these metrics together. These are offerings that we've had for institutional players for a long time, but these are the type of things that you're going to have to be successful as we come into next year and finding these screens. So we got accelerating growth. And what we show is that over on the far right, the style box that each one of these operate in. Most of these are blended in growth, and you can see small, mid, large. And I'm going to show you the actual spreadsheet on this thing, what we release. And then so we tell you what the target range is. And one of the, I was trying to come up with this name earlier when I was talking about this, but this is actually the magic formula is one of the favorites. This is a value, kind of a value strategy. We've got common sense, but the magic formula you'll see is good. U.S. multi-cap, old school value. These screens are going to be invaluable, I believe, going forward. And I think in stock selection and things that we're teaching on WaveTech and how to, whether you're managing your 401k or just managing your own portfolio, these are things that you need to have available. And when I go over to my account, I just want to show you where this stuff is. And there's a lot of data available on this. I just want to go, and I'm going to go to download the screens here, but these are all the actual stocks, the screens. This is a giant spreadsheet that actually has all the metrics, and it has all of our model metrics in them as well, telling you about timeliness and things relative to our models of when to entry and all that stuff. But this, I'll show you this, if I can get to it. U.S. GARP has, this is interesting because U.S. GARP stands for growth at a reasonable price. And when you get into this type of look at these stocks. I'm just trying to see here, 60. There's only 13 stocks that we were able to screen for with this. It's a very tight, trying to find growth at a reasonable price. We're at all-time highs, right? There's no GARP. And that tells you a little bit about the markets as well, as far as some of the growth at a reasonable price. But when we go down to this, you'll see something here in a second. Here's the magic formula. This thing really is magic. It's got a big net, and it captures a lot of symbols and stocks here that I'll blow this up a little bit. But this is the magic formula stocks. And this thing is pretty amazing when it comes to how many stocks are getting captured into this thing. There's hundreds of them. And this thing's magic. And if Jay, my son, could talk, he uses this list a lot to build a lot of strategies. And you can go all the way in, it's got all the sectors and all of the other elements in here. And we also tell you what models. And anyway, the point is, this is the stuff that you're going to need to have to be able to be successful in 2021. It's going to be about stock selection. I don't know how the indices will probably do fairly well, but in the end, it's not going to be about the. It's not going to be about indexes next year. It's going to be the ability which to pick really good stocks, and that's been the story this year. And everybody thinks all the big money's been in Tesla and that. There's been some amazing money made in other stocks. So, and we've got all kinds of stuff here, market grid, all kinds of stuff. And the rumor is, I heard through Grapevine, is that Market Grid may be coming into Portfolio Expert sometime in the near future. So I'm excited about that as well. But this is, I just want you folks to see this stuff because it really is what it's all about when you go forward. All right. All right, let's so somebody, if you're still around, you were talking about the financials. Is there an ETF or something? We're trading back at 0672 on the cash on the S&P again. Let's go over and take a look at the markets. We haven't looked at them for a bit. But we're looking at, we're coming up close to the high of the session again. So we got a little dip there, and now they're bidding them back up. The algos are running this thing. They're going to try to run a new high right as we speak here right now. We're 3 ticks off of a high. So it looks like they're going to try to print them up just right here in front of us. So we'll stay with this for a second. Here we are at the highs, and there's new highs. Boom. So, so there also would be interesting. The RXT Sell signal actually works on this little short-term chart too. So we'll have to see if we get an RXT Sell here at all. So anyway, so that was a nice little run, new high print, and then two handle sell. We'll see if that was the climactic move or not. Pretty good selling after that. We're trading 99 again. So that was a nice little spike. We did basically close above that RXT there real quick. The way this thing updates, it changed the angle of it. But So anyway, So thanks, Frugaholic. I love getting some euros. Appreciate it. Okay, so nice little reversal off that new high. That's a classic. All right. So, never use stops, ever. Thanks again, man. Appreciate it, Frugaholic. All right. You know what? Maybe this is time. I feel like I've gotten just about everything I wanted to get out as far as covering a lot of these markets. I think there was some decent content move. Now we're so much for the sell-off. We just printed. We're 37.05. I got to go back to the futures because they're trying to reverse this thing here again. So we get this new high print, reverse down. I'm telling you, these algos are running this thing. But what we look like we might get here is a dragon head. So we'll see what happens. They're starting to set this thing up. And this is a 1-minute graph. We got PPM1 on here. And it's at a 0.12, so it's not really at a trend mode. But this formation, these things in the middle here are what I refer to as the webs. That's all these tight lines here. They're standard regression lines. And this is somewhat of a bullish formation. So it would look to me that we're going to try to print another new high in this pattern here. And we'll see how this thing sets up. But we could stay within the grid. We're starting to see that big square grid. One of the things, and I'm just going to tell you folks, I don't care what you're doing in analysis. This is a teaching moment, I'll call it, is no matter what you're doing is if you are trying to figure out a technique or something like that, put a 1-minute graph up with your indicators, everything. You can learn, you get 60 bars every hour, right? So it's like going through 60 days or 60 months. The pattern should be the same. As long as the 1-minute chart looks like this, it's an orthodox looking chart formation. It's just not random, like lots of noise, but it's a symbol that has a lot of liquidity, like this E-mini or plenty of things out there, any stock. You can get a lot of experience just by utilizing a 1-minute graph and making decisions, even if you put a sim account together or something where you're making decisions based on that, where you start to get a feel for how these bars fit together. And I always tell folks if the markets were like Vegas, I would be banned because I'm a bar counter. I haven't really mentioned a lot of that stuff, but I look at patterns like 535s, 538s. There's 533s. There's all kinds of configuration bar patterns. Otherwise, you get 5 in a direction, you get a 3, and then a resumption. There's all kinds of stuff, and those are things that we are going to print. I haven't actually mentioned this, and I will right now. See what we got, 500 people hanging out. So, but I'm going to bring something up that I think that you folks should be aware of, and I'm just going to tell you. I'm going to tell you to go here, and if you want to find out, we have a couple things that we're working on a master class with software package, all kinds of stuff. We got some cool stuff, but we're not going to know how to get a hold of you because we're not going to publicly announce this unless you opt into this form. You go to kendallreport.com, give us your information. All we need is email. You can opt out at any time. We don't hammer you with spam and all that kind of junk. We put out stuff when we have something to say and there's something significant. So, sign up for this because this is going to be very useful going forward as we come into that year 2021. So, so here we are. They continue to kind of print these up. We did not get a new high yet. That little spike high is holding so far. We'll see how it goes. PPM1 is actually trying to accelerate, so we'll see how all that plays out. All right, so I'm going to do this. You folks are going to give me, I'm going to pick about 10 stocks, and but give me, let's get some stocks out here to look at. There we go. Let's be creative today. I know Apple, I know Tesla, so I have those. And the typical stuff. Yeah, man, you guys need that's why I showed you this graph a minute ago, right? When wrong place. This is why I was showing you this stuff at. It's not going to come up right away. These stock screens. There's more ideas than Neo and this typical stuff that's out there. Yeah, you need more ideas. And this is all based on fundamentals. So we take fundamentals along with the technicals and the quant, and we come up with some pretty cool stuff. So here we are. They keep trying to print this thing up. 0250 on the future has been high so far. So we'll see how this thing plays out. I don't know about you folks, but I wasn't that impressed. Okay, I got plenty. I'm going to pick through some of these and see what we come up with. Yeah, and I'm going to do something that I just saw. I want to bring up my Buffett strategy. That's always interesting. My Airlines Buffett strategy, and I'm going to show you a couple things here. Got a little downtick yesterday, and we'll go through some of these stocks. Okay, so we'll do American, Allegiant, Boeing. So I'll go through some of these, and we'll go through these. But this portfolio I built real time live on this channel back in May, and we built it early May, I think, right after Buffett sold all his airline stocks. We put in these airlines, these 9 symbols, into our manager, and this thing just went ballistic. Okay, we got out. Our model sold out everything. It tried buying it, went down. We gave back a little bit. Then now we've got this big ramp up, and right now, if we look at the open positions, this is what we hold. All 9 of them. American Airlines, and most of these came in on the 10th of November and some on the 11th. I'm sorry, of the 6th. Boeing came in on the 6th. It's up 46% right now. And but you can see the numbers here. These are the percent gains since the 10th of November. So yeah, so this is the advantage of having this. We only have 2.2% in cash. So this is done pretty well. So let's go ahead and let's dig into some of these stocks that you guys are putting out at me. I'm just doing a couple. I just need to write down a few more. We've got only about 15 minutes to go through some stuff. So let's go ahead and we'll start with, let's get these out of the way. Let's get Apple out of the way. I actually have this is interesting. We're trading up to about a point. We're trading up to about a 0.618 or 0.76, 129.91. So we're doing a full-blown retracement. This is a dragon head. We're going to be locked in this pattern for a while. I don't see us. We could make a new high. What was that high at? Let me just bring that up. That high was back on 9/30, which was 137.98. That's going to continue to be high. That was a big day. I talked about that. The good news is that the market grid will probably start, not probably, it will contract as we come into January. We're going to see some contraction and the what's called a volatility contraction, which will keep us kind of locked in a sideways range. But, you know, we're pretty close to being about as high as we could go. I guess we could go up and print a new high if the markets are going to go crazy and stimulus and everything's going to come in and the fairy godmother shows up and she wants to buy some Apple. You know, we'll see how it all goes. But I think this pattern is pretty clear on a monthly basis. And we go down to, we're going to do top down. One of the things that is out there, and I put this out there before, I've got the Fibonacci projections up here. There is projections for Apple, very long term, and I've seen these happen before, but they take a while for it to get there. We saw this, I'm just going to back up a little bit. Back on 4/24, there was a projection on the weekly for Apple to go to 107. Well, we hit that on 7/31. There's been no projections, and now there's a projection that was issued on 10/23 for a high target of 187, 220, and 240. Can we get there? Who knows? This pattern, it probably can, because I think the fairy godmother looks like she might be buying Apple. But this is a very long-term projection off the intermediate. There'll be a lot of noise in between here. We did have some minor projections here down at 129, 138, and that really equals the highs that we saw over here at 137.98. So this pattern here is probably still the valid one, and there's a lot of work to be done, but PPMs are all looking good. 0.96, 1.47, and 1.51. So this is all very, very bullish numbers. And then if we go to the daily here, you're going to see we did get RXT Sell. We're up a little bit. So this is most likely going to go sideways here for a couple of days. Where we at? SPX at 10.18. So they want the highs. So let's. I'm going to flip over here, and I want to. Yeah. So we made a new high again. 0450. We printed by two handles. I'm going to flop back and forth as we're coming into this close today. So we're definitely seeing some sideways or movement here in the last 4 minutes, but we printed a new high and we're very close. 1020, trust me, they want that 3712 number badly. So, you know, so much for, with the RXT Sell signal that came out yesterday, these things are not, they work about, I would put them in the upper range around 70%. So there's only 3 out of 10 of them that aren't going to work. And then when you got the Fed, you've got all the stuff that's out there this week. This is a treacherous environment to try to play. We'll see how it ends up, though. If they can print over 12, that'll be interesting. So we'll keep an eye on it. So let's go back to some individual stocks. Let's do Tesla. Get that out of there. Tesla, this is a daily Tesla chart. We basically got into an RXT on Tesla on the 7th. We got our 2 days down, third day reversal. Now we're following the 10-period moving average. We're back at the 10 right now, looking at 622.23, last 623.71. So we're hovering along the 10, and PPMs are on a short-term basis looking kind of flat. I think one of the things I talked about on Tesla, since it's going into the S&P on Friday, what we're looking at here is that most of the pricing's already been done, and the fact that we moved up since that was announced for last month. What was the low down here? We went from 404, and we'll just go last price to 623, right? That's a pretty substantial move. So when they add in Tesla on the S&P on Friday, they're not going to have to buy as many shares because the price increased. So, it'll be interesting to see how that day goes. Rumor is they're going to turn over $100 billion in stock and everything to rebalance all of these things. Plus, we have the quarterly rebalancing going on in the S&P on Friday. So if it gets really crazy, I'll probably do a live stream. It'll be the last live stream for 2020, but I may do one depending on what happens on that. So so now we're selling off on the SPX back to 06. So we'll see how far it goes down. We'll tune back in at about 15 minutes. We'll focus just on the close and watching how this thing is going to end. Let's go to weekly Tesla, because there's some things that are being revealed there. This is that big square formation. This was the dragon head that I talked about going back when we printed this big high. I said that would be the high for a while. It was for about, this is weekly, for about 2.5 months. And then, of course, the announcement and this ramp up. So we're seeing a couple things happen here. Is we're seeing that we're meeting some of these objectives. So let's go and review that really quickly. Back on 9/11, we got a upward signal down at the bottom of this chart in the middle here, this pop-up. We had a high target of 561, 672, and 740. So that target was met here on the 11th, but we have a new minor target that's in here. It's kind of interesting because we got the pattern that was recognized. Now there's some pattern recognition. These dots are coming from Fibonacci projections that are coming off of high lows that are determined by an algorithm that I built that looks for patterns and then will project Fibonacci patterns out in real time. This will run on a 1-minute graph. It will run on any length. But what I look for here when we're looking at a weekly, we're just looking at what type of price projections are coming out. Here we are, high target 691 is the number. 645 is high target 2. So we basically went right into that high target 2. The high so far has been 654, 645, so about $10 over that number. And and the final thing to look at here is monthly, and this is just an insane chart. And I talked about this last month. We did get an RXT sell, and sometimes what we'll do on one of these RXT sells is we'll bump up against the top of the pattern and then come back in, and we'll spend. The likelihood is, just like everything, I think that this, you guys are going to get tired of hearing me say this, but you're going to see multiple months of these high level consolidation ranges. And it doesn't mean we can't move this meter higher in this pattern, but you're going to see it move higher than contract, otherwise come back and trade into this pattern. So this is a pretty broad range. And the other thing that's going to happen on January, so this is a monthly Tesla, you're going to see the market grid turn up, but it's also going, it looks like it should contract just a little bit. So it'll start to get smaller, and that's what these dragon heads or these big high-level consolidation patterns that set up look like. So that's exactly what I think will happen here. PPMs are actually, while robust, are failing to a point on a monthly basis. So they're starting to show some weakness. There's divergences showing up, all types of things that are starting to show up. So this particular run on Tesla is probably, wherever it ends, okay, all I have right now is those numbers I just mentioned on the upward projections off of the weekly, but the market grid itself here is high end is 725. So this numbers that we're printing here right now look like they'll be somewhere around the top. Now just know that once Tesla gets in, I think it's roughly $11 move will be 1 point in the S&P. So it's going to be, I think, the number 5, I forget now, 5 or number 6 stock in the index as far as capitalization. And typically when they add these stocks in, you get somebody taken out. They're taking out Aimco, which is a real estate company. So when they take these out, when they swap, they usually is a swap and they're somewhat equal value. You don't normally get it's almost a mid-cap stock. The Aimco stock is not that big for this mega valuation stock. So this is bringing Tesla into the index, and especially with the amount of volatility that we've seen, is going to probably increase the S&P volatility as well because of this being another big top-end stock. Because the S&P is cap-weighted, it's just going to skew everything. So just be prepared for even more volatility as we go forward. But I still think that all of these markets, you can go across everything that I've talked about for the last almost 2 hours, and you can absolutely look at everything that is there, and we're going to be, uptrends are in place. We're going to be slanted to the upside, but we're going to see these big volatility swings. It won't be until, February, March before anybody's going to be able to do anything on administration, Congress, all this stuff. Maybe, they certainly haven't had a lot of heat under them to do much of anything, or I guess as long as Trump was in office. Will they do things differently? I don't know. Like I said before, if Georgia stays with the GOP, then that's probably going to be enough of disruption that it's going to be hard to get anything to go. Just that same battle that we've been watching for years will continue. Instead of it being Republican White House and the Republican Senate, it'll be Republican Senate and Democrat White House and Democrats in the House. So it's going to be interesting to see how all this stuff plays out. So let's see what time we got here. Yeah, we got about 15 minutes. Hit on a couple of these symbols that you guys were looking into. Let's go to daily. Let's take a look at Boeing. I said I'd cover some of those airlines that I talked about a little bit ago. Boeing's down 1.5%. This is daily Boeing. PPMs have all rolled over, so this thing is fairly close. And it's interesting because on that Buffett strategy, it's utilizing the weekly model. So let's take a look at the weekly. The weekly, and I've talked about this a fair amount. I thought we would get up to all of the airlines, all of this stuff would get up to about the 200-day moving average, a simple average. So just know as you're looking and doing your own analysis and whatever you're doing when you're following these stocks, is that 200-week moving average is going to be significant. The 10-week moving average, 192.93, is going to be major support. I realize that's quite a bit underneath where we're trading right now, but that's very likely going to be the number. And as you look at the PPMs here, the PPM 3 on a weekly on Boeing is just absolutely screaming. So let's do some quick airlines. Let's look at American, similar configuration. I still have the Fibonacci patterns and stuff out there, but we've got the PPMs at 2.7, 1.99, and 0.50 PPM 1, 2, and 3. And those are all to the point where they're very bullish trends. So there's an underlying trend on to the upside, and that's likely to be sustainable. Now, whether it's about vaccines, people traveling again, I don't know what will be the scenario. We'll know that as it unfolds, and we continue to watch that. So you guys be nice out there on the chat. Yeah, I kind of get a kick. I get the whole Tesla thing and the attraction to it. Sure, like my gas vehicles. Doesn't take me 2-3 hours to fuel up. Yeah, I wouldn't want to be doing the trip. I think that a trip across the country is increased by 40% of the time if you want to go electric at the moment. So maybe they'll figure out how to charge those things up. Also, those of you that think you're green, depending on where you're living at, you're probably still burning natural gas or coal, depending on where you're living at. I tell you guys all the time, if you want to be super green, move to Phoenix, Arizona. We got nuclear and hydro. That's what runs this place. So we're about as green as you can get. And if you go to Scottsdale, Arizona, every other car is a Tesla. So they're definitely very popular for sure. Yeah, 7 hours, yeah. Somebody's asking me about my Porsche. I had a 930, 1987 930. It was an old 930 turbo Porsche. So that's funny. We can't talk cars. All right, so let's. But these airlines, hospitality, all this stuff. Yeah, you're right about coal electricity is still, yeah. According to the president, the office of the president-elect, they're going to eliminate all that stuff. So they're not sure how they're going to make electricity, but they're going to make electricity. So, yeah. I grew up in northern Indiana, and I used to think they were nuclear plants, but they look like nuclear plants, but they're actually coal-fired. These chimneys they have, and look just like a nuclear plant. Anyway, I always thought they were going to blow up and we were all going to melt down one day when I was a kid. So anyway, yeah, let's. Yeah, I think, something that's out there is just real quick on the Tesla thing, since we kind of got off on subject. What time is it? Yeah, about 3 more minutes. So I'm not going to be able to get in any more analysis on individual stocks. But one of the things that I think is hydrogen's still out there too. Fuel cells. That's still a viable alternative, and they're way better than electric if you can figure out how to do it. way better. And you're not going to be spending 7 hours to charge a car, you know. It's just sort of interesting, you know. I realize what folks are trying to do. We're starting to get some selling in this S&P, so we're going to start focusing in here in a minute. My favorite vehicle I own right now is my Ford Raptor truck. I love that damn thing. It is a riot. And we live in the mountains, so there's lots of opportunity to use it. So, takes about 8 minutes to fuel. Okay, and that's with a 37-gallon tank. All right, so let's go ahead and let's flip over. Let's focus in on these, on the futures here as we come into close. We're seeing some selling come in. So they couldn't get the 12 number. We're back to 3703. We'll see what kind of selling we get in. You know, we see this a lot, by the way, and I just want to cover this for a second. As we see this where we get these huge moves up like this when the Fed is talking, and it's like the hangover. The next day there's a hangover. So, you know, tomorrow morning we got unemployment stuff coming out, and I've been talking to you folks. I remember going back as we were coming in to September, I kept telling you I think we're going to see the economy start to slow down. Not that it was that robust, but some of the recovery things that Powell was talking about, we were going to see that stuff starts to slow down. We're finally really seeing that. Retail sales missed today. Those numbers were everything was good, everything was wonderful on that level. So we're starting to see all this roll over, and then, you know, some of these shutdowns are going to have an effect, but I'm still convinced that most people have figured out how to exist without having to go to work. So once again, if you're hospitality, you're a restaurant owner, you're all those people, you're screwed, right? You're still a long ways from recovery. But a lot of other industries are just fine. Nobody's even felt a hiccup on some of these things. So, Mike, appreciate that. Yeah, it might be something there on the shortage of platinum, but you know, I think there's still a valuable of something to look at. Electricity isn't the save-all that it's being built up to be. You know, it's got to be produced, and it's not always easy. And you know, I wonder how long it would take on a 2 kilobyte solar system to charge a Tesla. I wonder what that would be. So here we are at 702 on the cash. We're trading 36.96. We're up 9 handles. It looks like trying to get some selling coming in here. And as always, you folks know this, we're about 7 minutes out. We are always looking at that last 2 minutes. I keep trying to teach you folks that if you look at the last 2 minutes of the markets and of watching the futures, see how they trade, you can get an idea what kind of selling or buying's coming in, and then you see the reaction of the traders right once most of these trades that are being put on in the last, we'll call it 5 to 2 minutes, right in the range where we're about to come into right now. Our mutual funds, ETFs, a lot of people front running, they're buying stock, they're putting futures out there to neutralize those purchases or sales, whatever's going on. And then right after that, they unwind all this stuff. So that's why you want to watch the first 2. Sometimes it'll carry into 5 minutes or longer afterwards, but that's definitely some of the things that's going on there. Yeah, Ray, I don't know if it's a good time to get into airlines. Our models currently own them. Yeah, that's JR, you're right, man. That's good point. Actually, really good point. So you've got, let's say anything that looks like the, quote, air quotes, Green New Deal happens. Yeah, how is Tesla going to pay their share of the road taxes? Who's going to fix those roads they got to drive on? Good call. And thanks, Gino. Happy New Year to you as well. Have some great holidays. Yeah, Mitty, Milty, I guess it is. Sorry. Yeah. Yeah, I don't know. Maybe that's the trade. What you said, you want to lose money. Maybe that taking the other side of that trade is it, because it's all priced in. We'll see. We'll see what it looks like. I'm anxious to watch it. I'm not going to make a bet on either side, so that's okay. Thanks, NL. Appreciate it, man. Yeah, so as we come in here, we're still kind of printing down. We're at 37.0350 on the cash. We're trading 97 on the futures. We'll see if we get anything substantial coming out. All right, 90. Yeah, we've kind of stabilized here. It's getting kind of boring. We've got 4 minutes to go. Yeah, Jeffrey Hard. There was a book out I read in the year 2000, 20 years ago. It's hard to believe, almost 21, called Natural Capitalism, and I thought it was going to be, yeah. Anyway, it's probably still an interesting read. Some of their predictions are way off. Things are just now starting to turn. They had things happening very quickly. Tesla is exactly the car that they talked about in 2000 there. So maybe Elon's not as smart as we think he is. If you pull that book up, you'll see. They're talking about these flat-bedded module cars that you just, electric cars, or they were actually more on the hydrogen mode, the fuel cell, but you just strap the bodies onto them, and that's pretty much what a Tesla is. My problem with Tesla is they're pieces of shit when it comes to luxury cars. They're terrible. They're not a good car. I get what they do, but Elon's getting away with it big time, man. You put a Tesla up against a BMW or Mercedes or your favorite car, and you got a piece of shit next to a nice car, and the Tesla's the piece of shit. That's all there is to it. The interior is all plastic. It's just junk. There's a shop in LA I know of that is actually going in, and they will take your Tesla and actually make it a nice car. But it's like lots of money. It's like $100K, something ridiculous. But they'll put all the nice stuff inside. Yeah, it's like Tesla's like a Walmart brand. Sorry, I haven't. The Neo thing is kind of interesting. We'll have to see what happens, but that's yeah. So, man, this thing is just drifting. We're not doing much here. That's why we're talking about cars, I guess. We're in the final minute. So we're seeing a little bit of selling come in here. Let's just pay attention here for a minute. But yeah, a little bit of selling coming in. We're trading 0188.79 on cash. We're 94 even trades, 375s, 350s. So definitely some selling coming in here at the close. 250. 250 low print so far coming into the close, 225 printed, and now yeah, there's your bell. So so some pretty decent selling. Now you're seeing that covering up. So it's interesting that we saw that selling coming in today. There's just a lot of work to be done this month from the markets and all the structuring and stuff like that. Yeah. Yeah, I'm just looking at terminal sandwich. Absolutely. Yeah. Yeah. If you go and start comparing these cars and then you start thinking about charging it for 8 hours to drive or 5 hours, whatever. Yeah. No. It's not a novelty, but it is, it's not everything you would think, as far as that goes. Yeah, Gino, don't get me started. Jeeps, it should be illegal for Jeep to make a vehicle. I wish I had pictures. I had the most tricked out Jeep you ever had. I bought it in an aftermarket, brand new, and it was the biggest piece of shit I've ever owned in my life. Talk about plastic. You want to talk about no quality? Buy a Jeep. Oh my gosh. Okay. All right. I did it, didn't I? I know. I did it. Oh, man, I did it. I couldn't help myself. That's a trigger for me. You mentioned Jeep. I sold the Jeep and bought a Raptor. Yeah, I'll take my Raptor on the trail next to your Rubicon. No problem. Anyway. Yeah, thanks a lot, Professor Paula. Merry Christmas to you. All you guys, thanks for everything. Like I said, if it gets crazy on, if it gets really crazy on Friday, it could be fun to hang out. So I'll light up the screens. I'll be around. It's going to get, the next few days getting crazy. I'm going to be out of town for a while, so that'll be fun and always. Yeah, it's always interesting doing trips, right? So it's a family trip, so it's okay. We're going to visit family. Yeah, Dee, you're welcome. Thanks for putting that on the timeline. And all I can tell you is you ain't seen nothing yet. We're working on some really, really cool stuff for the community. And, I'm very sincere about what I do, and I do my best not to get into any weirdness on the channel or anything we do. And I've always been like that. I am an institutional player, and I always have been. So, I just don't get into a lot of these things. So, yeah, we're still a little bit under pressure here on these futures at 94. So, yeah, Elaine, thanks. I don't know if you're still on board or not, but we're going to do some stuff to go on. And I'm sorry, Gino. That's man. I'm telling you, I wish I could put a picture of this thing on the screen. I'm gonna try it. Since we're just kind of winding down and doing holidays and all that kind of stuff, I'm going to see if I can get my iPhone to go on this camera, because I'll show you. I always say I have a Mac Pro. I have a Macintosh computer. I have iPhone right here. We have Apple products. And so I get to bitch about them. And I also owned a Jeep once. So I'm hoping that here in a second I'm going to be able to I'm going to try to put something on the screen just to see if I can pull this up. So yeah, on WaveTech, you can actually run on a phone. It's a little clunky. on the phone. So the portfolio expert, you got to have a decent computer to run that. Let me be good while we're just hanging out and talking. I've got a few more minutes that I can spend with you folks, but let me just see if I can bring something up here quickly. I do think this is kind of funny. I'm going to put this over for you guys. A buddy of mine sent this to me. Says, I feel fine. The vaccine didn't hurt at all. So I thought that was kind of funny. Better get that off there. The YouTube folks will come after me. But one of the things, as far as I'm just trying to find something here on the screen. I don't know why I can't ever find this. Just bear with me. So this we put up on the screen, but if you did want to get started, this is a good time to get started with WaveTech. Mainly because we prorate it. There is no trial on this. There is a trial on a portfolio expert. There's a 2-week trial on that. But if you go to the Kendall Report /WaveTech, you can sign up here. It's the middle of the month. It's less than $50 for the balance of the month. I think, not sure exactly what the training schedule is going to look like. I haven't talked to Jay about it. He's in charge of running that for the most part right now. So that's going to be something we'll talk about, and we'll let you folks know as far as that goes. But this is one way to get, so you can run this on on any kind of Chromebook or anything. It's just, you just need a web browser, and it doesn't. I think you could probably run this wouldn't even have to be a browser that you could run an old browser on this and it would work, meaning that you don't even have to have an HTML5 capable browser. This is an old software that runs probably in HTML2, okay? It's pretty old, but this is a good way to get started, to introduce yourself to what we're doing. Get into some of the training sessions. We're doing those in Zoom, and we are going to rebroadcast some of these things. But it's a good time to do it because it's not a lot of money to start, and then at the first of the month, then you'll get billed again. But it's give you some time to do that, and I think there's plenty of training stuff that's already posted on the YouTube channel and things that you can look at to get a feel. And there's also on the website itself, there's training videos, and I've been told that it's actually very valuable to even go in under support. You get WaveTech training. You can go here and bring this up, and you can start the course, and it's got all these videos that you can watch, and so you can go through and watch those. Plus, we have the WaveTech, or the Portfolio Expert is out there as well, and there's Portfolio Expert University, and there's a lot of learning opportunities, and you don't even have to buy the software. You can just go here and watch these videos and get a feel as well. So, do that, because I think that's something valuable. And like I said, one of the things that I think is important to understand from that standpoint is that having a quantitative decision process, non-emotional, being able to build a portfolio to run versus just, drawing trend lines and trading indexes and trying to figure out whether I'm bullish or bearish, that stuff it can work. I talked to someone the other day that by following what their interpretation of my videos has helped them to over quadruple their account, and so that's awesome to hear. I love to hear that. So, but the realities is that there's a lot of stuff, and it's really about doing things in a different way. And if you were to go through our website here, I'm just going to talk about this, and if you don't want to hear this, it's pretty much over for this session anyway. But you can go in and there's a video here that I would suggest you watch, and it's actually on FOMO, fear of missing out. So it's about having a strategy that actually does what we do. It's obviously a sales pitch, but as you go down to different elements of this, we walk you through all of the different parts as you go through the website, and you can see dynamic direct indexing. This is something we're going to be showing you very soon, and how to literally take any ETF from mutual fund and rebuild it, make it your own, eliminate all of the internal fees, and do the trading through our platform to help route those orders over to your custodian so that you can run your own no fee. Also, if you have a custodian or a broker dealer that has fractional shares, that you can run virtually anything. And the hardest part right now for retail is getting the order flow of there. We're working on a solution for that as well. So it's just taking time to do these things. These are actual development. And I had a amazing meeting just on last Friday with some folks that are quite capable of building this thing out. But it's sort of like going to an architect. You're looking at it and it looks really good on paper, but they haven't broke ground yet, and that's where we're at. But there's some really good conversations going, and we don't think it's going to take more than 6 months to do some of these things or less. Just trying to be realistic. But anyway, I really appreciate everybody hanging around today. So as far as everything goes, folks, I'm actually looking forward to a break. This year's been challenging, to say the least. And so anyway, I really appreciate everybody that's been on this channel. We've grown to like 26,000 subscribers on the channel, which is awesome. And we're still getting, 5, 10, sometimes 15,000 views of our videos. That's fine. This is not about the video channel or the YouTube channel or any of that. It's really about doing what I said, is helping you guys to manage your portfolios. We're working with a lot of people on their 401ks, running things. We've got some really cool things we're going to be doing on showing people how to take control of their own financial life. And most of that will be nominal fees, courses that we're working on putting together that I think you folks are going to it's going to be crazy cool. I don't have a big agenda to like many of the folks that we've serviced in the past. We're not taking fees off of your money or any of that stuff. So anyway, thanks for everything. Yeah, go ahead and smash that like. And so I'm still around. The video tonight, video on Friday, video on Sunday night, and possibly a live stream, depending on how crazy this rebalancing, quadruple. Think about what's going on Friday. Quadruple witching. You got rebalancing of the S&P. You're adding in a major asset, which is going to be the 5th or 6th largest asset in the index. So what could possibly go wrong, right? So and maybe one of the folks go. I actually I have a Martin that I really like. Somebody's asked me about my acoustic guitar. I have a Martin that I like a lot, and I also have an Ovation I've had for a very long time. But I'm really a bass player, so I'm not a. I'm pretty decent guitar player, but that's not it. But appreciate Chris L. Appreciate all you folks, and it does starting to feel a little bit like that In-N-Out hamburger time. So we'll go from there. But thanks. Yeah. Somebody, I'm just commenting. Folks, thank you. Yeah. I feel so blessed. I'm almost 70 years old. It's crazy that I feel as good as I do. But I do Wim Hof. Cold showers will change your life. And breathing. If you don't know who Wim is, I would be shocked. But do that. Keto. Keep your body lean and mean. And you can, maybe you too, when you're 68 years old, be running a YouTube channel. Who knows? And running everything to do. But, so anyway, yeah, that, like I said, what could go wrong on Friday? So I think it's going to be exciting. So maybe I'll just hang out because it's fun hanging out and doing these things. So I appreciate it again. Yeah. Actually, it's about a 20-minute drive to get to In-N-Out, but it's worth it. So anyway, yeah, I think you're right. There's a Five Guys that's closer. And I don't like Five Guys. But I also do protein style, which is no bun. So anyway. Okay, that's interesting. Thanks for that. Let me write that down before. I'm just trying to. Yeah, so okay. Yeah, my favorite line is "Life is short and long at the same time." So, it's how do you do keto? You don't have a bun, Thomas. So you have like In-N-Out. You can go and get a. I'm actually going to get a triple cheese, triple meat, wrapped in lettuce, and that's it. Yep. That's pretty much it. That's basically it, a lettuce wrap. They just call it protein style. They've got their own language there. Yes. The only problem with going now is I have a lot of friends that are there, and if I go later, it's pretty good. Parma, I really appreciate everything. I'm just kind of hanging out here for a minute, reading some of the stuff that you guys are saying. But yeah, if you guys don't know who Wim Hof is, actually, I'm a big Jordan Peterson fan. And Peterson and his daughter recently, I think on December 6th, did an interview with Wim. And it's probably one of the better, I guess I'll just say that Jordan was keeping Wim very focused. He tends to he's a crazy man. And he had Wim right here. And it was one of the better interviews I've seen Wim do, and explaining some of his methodology and things of that sort. And it's yeah, it's pretty amazing. You don't think. I'm an old guy, so I had some neuropathy in my feet, and it's 80% better doing cold showers with and circulation in legs and everything. You younger people out there, there's a lot of head. Life, like I said, it's short and long at the same time. But as you get older, there's just all kinds of issues and things that you find out about, and that's one of them. So, but I was a big hike. I did a lot of hiking. And anyway, everything's like coming back. It's very interesting by doing the cold showers, and so it's pretty good. Yeah, right now, Tony, you can, yeah, you have to be a subscriber, not, to the Portfolio Expert website, but you also get you get the stock screens, you get all the only thing you don't get is the desktop platform, which is our institutional platform, Portfolio Expert. That's what you don't get. So that's yeah, Jay's telling you there. You get Market Grid in the screens, and that'll probably stay there for a while. Ultimately, it looks like we're going to maybe move that over to Portfolio Expert. So anyway, good talking with you folks. Yeah, I am definitely going to check out the, I guess you're calling it Renew Therapy. I'm going to actually look that up right away, because that's pretty amazing in itself, you know. So anyway, folks, thank you so much. I mean, we hung out and talked for a while. That's pretty cool. Yeah, so Anil, that's interesting, because I basically do that as well. I do keto, intermittent fasting, and like I said, 80%. That's interesting. Yeah, I've done a lot intermittent. Yeah. And that's the thing about, especially you're doing keto, the intermittent fasting's easy because you don't have all those cravings and sugar and all that crazy stuff that you go through. So it's pretty cool. All right, folks, this is it. I'm going to put up the screen for the end of the show. And we're going to call it quits here. So thanks for hanging out. Yeah, I'm still hanging out, and I saw someone talking about salts. This stuff is also a game changer. This Drink Element, LMNT. If you go to that website, you'll see this stuff is amazing. They've got different flavors, but it has changed everything. I just got this the first time about a week ago. Energy, focus, everything. It's incredible, crazy. I don't know, Matta, I don't know who said that, but I just came back on just to, but check that out. That's pretty cool stuff. It's not cheap, but it's got a bunch of salt. It's got potassium and magnesium, and if you're doing keto, I know this is not a keto channel, but you need salt, and this is good. I do one of these a day, and it really helps. Hey, listen, so far I've tried the mint, what do they call it? It's mango chili. It's kind of spicy, and I got the chocolate salt, and the chocolate salt you can put in with coffee, and it tastes like a chocolate mocha, a little salty, but it's really good. And you can even put some coconut cream or something in it and do that as well. So it's absolutely crazy good stuff. And they got all kinds of different flavors out there. So they got variety packs. They got all the stuff, but it's kind of pricey, I thought. But it's all, yeah, that's what it does. It's all electrolytes. That's what you have to have, and that it was a game changer for me. And this has been very recent from that standpoint. So yeah, that's been very interesting from that standpoint. But yeah, and potassium also is really big. Most people think they'll take chromium when especially if you're just starting keto and you're getting off the sugar, they'll take chromium to do their sugar cravings. No, potassium. That is the key, potassium. And you can get that through fibers and lettuce and maybe different types of greens, but you can't have a lot of that. So you definitely need like potassium supplements and all that. So it's pretty amazing. But this stuff that I sent, that link I put out there, that's all about. Matter of fact, this was basically designed almost for the keto folks out there. It's obviously a big market, but yeah, there's quite a bit of stuff out there that you can all the flavors and all that stuff. But this has been a big game changer for me. Like I said, it's not cheap, but you can't do no banana. Banana does not work. Those things are like, I call them sugar sticks. Yeah, lots of potassium, absolutely. And if you can get that, anyway, listen, I'm not different than anyone. I'm never gained a lot of weight, but I have gained weight. This has been the easiest diet. The way I eat, maybe I should just do a keto. I don't know. I don't want to do it on this channel. Maybe I should, but I have a method that I have figured out. This is magic. I've been doing it for about 1.75 years. Yeah, and I didn't have a lot to lose, but I was doing intermittent. I'm deep in this, folks. Okay, we got 170 of us and some engagement here. But yeah, they're pretty. When you start to develop a diet, and especially mine was for health reasons, I was doing intermittent fasting, eating donuts coming off fast, and I blew up my blood sugar levels, and they're 100% normal now. After a year, it was only about 2 months, 2.5, 3 months on keto. I mean, I was hardcore. I mean, I was lucky to do 20 carbs there for 6-8 months. So, I don't have any blood sugar issues. My neuropathy's going away. These electrolyte drink has been amazing. And like I said, it's been in the last week. So it's pretty, it's been a game changer. So I'm a big advocate. I like it. Matter of fact, I wish I said that there's a keto channel. They subscribe to me that I had ran into them. I've actually used a lot of their recipes and stuff that they have on there. And it's kind of, I kind of reached out to them. I thought it'd be kind of cool for us to talk. They're obviously a fan of mine, so they were able to subscribe to my channel. But and I subscribed to them, so it's kind of interesting. You don't know who's who, I guess. but they're a young couple, and I think there's I'm just gonna go on for a minute because I think they're still here. I'm just trying to find they've changed the studio around a lot, so I can't find them at the moment. But it was oh, here we go. Yeah, I'm not finding them. That's unfortunate. Oh, that's why, because I'm on my other channel. I'm not on the Kendall report. That'll do it every time. Bear with me. All right, so here's I'm gonna put their channel out there because I really enjoyed. They do some really good work. So if you're looking for like some cool recipes, they've got some cool stuff. And of course, if you don't know Dr. Berg, then you're not doing keto. But here's their channel, Keto Connect, and yeah, so, yeah, anyway, they subscribe to me. Putting them out there. Yeah, magnesium and B6. Yeah, there's a lot of cool stuff you can do. Those of us that, if you want to hang around, I want to hang out around with you folks and do a bunch of work here I've got plans for all of us. So I'm doing my best to make sure all that happens. I still have a lot of people depending on me, you guys included. So anyway, thanks for hanging out. 30 minutes. I kept rambling about nothing, so that's good. Yeah, I take some supplement. I'm still here. I take some supplement for sleep. It is actually called Sleep. I got it off Amazon. I like the blend, but that and some melatonin. That's pretty much it. And my sleep is my sleep, as you folks know, is somewhat regulated. I kind of don't worry about. I don't have a scheduled bedtime, but I've actually gotten a lot better, so that's a good thing. But yeah, so let's see here, Brian. Hey, fellow Arizonan. Yeah, we used to live in Mesa many years ago. Moved from there to Scottsdale to up in the Prescott area. So yeah. Yeah, I'm trying to. Brian, is that YouTube, or what is that? The at sign. So is that calculate keto? Is that it? Or calculated? Well, Brian, send me an email at info@Kendall Report. Put your phone number in there. I'll give you a ring. I actually enjoyed talking to a lot of folks. I've talked to a lot of folks on there. And even did a couple Zoom meetings on Saturday morning, hung out with you folks. Those have been fun too. So anyway, finally going to call it. Hey, I just subscribed. So anyway, thanks again. And I will talk to you folks tonight on the video. See you later.